Our next segment is titled Future of Technology Services, Winning in the Next Decade in association with our knowledge partners McKinsey Co. I'd like to invite Pravin Rao, Chairman NASSCOM, to set the context for this session.
Good afternoon. A very warm welcome to everyone. Since the last couple of days, we have been hearing a lot of conversations around how technology is impacting our lives, our businesses, and everything around us. We also talked about risks, particularly risks from cybersecurity threats. We have talked about some of the enablers like talent and policies. And we have also talked about what does it take to be a leader in this hyper-digital world. One thing is very clear, we are pivoting into a hyper-digital world and it has implications for technology service providers. NASSCOM has been partnering with McKinsey for over 2 decades now. Our first report was way back in 1998 when we talked about the vision for the industry to be a $50 billion industry. That actually laid the foundation for what today is a 194 billion plus and a very fast growing industry. Our current part, also way back in 2015, we also published a report. We talked about Perspectives 2025. This was the early days of digital, and as per the report, we said by 2025, digital will be mainstream. We also said 40% of services revenue would be digital. Guess what? Today we have 28 to 30% of our revenue coming from digital. Obviously, we have seen quite a bit of acceleration, and this will only go further given the current pandemic situation. Our current partnership with McKinsey is to look at the current post-COVID world, look at what are the immediate opportunities that industry can take advantage of. At the same time, look at what are the implications and what does it take to be a leader in the new normal. So we split the report into 2 parts. The first one was a microscopic view, the short-term view of how the industry is doing and what are the immediate opportunities it can take advantage of. It was published in December and it was very well received. The second report is in the work, the telescopic view, the long-term view of what does it take to be a leader. It's in the work, it will be probably published in another 10 days. But we wanted to use this forum to share some of the key findings. So with this, I would like to invite Noshir and the McKinsey team to share some of the key findings.
Thank you, Pravin, and to the entire NASSCOM team. Good morning, good afternoon, good evening. It's an absolute pleasure to be here with you and formally launch our report. As Pravin said, this report was in 2 parts. One was a microscopic version and one is the telescopic version. Today, we are talking about the telescopic version, which is a view on what are the 3 to 5 years out. What do we believe, what do we see, and what do we expect to happen over that? I'd just like to go back. Pravin, as you rightly said, I think it's a little above 22 years ago when we did our first report in 1998, when the industry was $2.5 billion, and we dreamt that it would be 50 billion, and it is indeed today closer to 200 billion. And this report sets the foundations for the next 5, and in fact, the next 5 to 10 years. Back in December, when we launched our microscopic report, we made 3 important observations. It was what Thierry was saying, in fact, in the previous session, which is when we went and talked to clients, we found that client after client was saying technology leads our recovery. Technology is central to the recovery from COVID. It is central to our rebound. And indeed, we saw that coming through in the order book, in the actual confirmations of work to all the industry participants. And with that, we also said that we believe actually that technology spending is going to bounce back far faster than it has ever done from previous crises. And as a result, we're seeing again that acceleration in spending. But the last thing we also said is there's dramatic differences in performance. And today we're going to try and highlight what differences in performance, what is causing one group of clients, one group of providers, one group of captive entities to perform a lot better than others. This report will be presented by two of my partners, Vikash Daga and Anuj Kadyan, who have led the work on our behalf. And I would just like to say formally on behalf of McKinsey, a big thank you to NASSCOM, Pravin, to you personally, Debjani, Sangeeta, and by the way, the entire EC and the industry, because we always say this is not a McKinsey report, it's not a NASSCOM report, it is the report from the industry, by the industry, for the industry. And with that, to unveil our highlights, I would like to call on Vikash to actually present the findings of our report. Thank you.
Thank you. Thank you, Pravin, and thank you, Noshir. What I will share with you today is a culmination of 3 months of work with NASSCOM and multiple interviews with tech natives, enterprise CXOs, cloud service providers, and the industry players, which is all the service providers. I want to start with an overview of the 5 big trends that will shape the future of technology. These will have very significant implications for service providers. First, the good news. We expect tech intensity to increase from 3% of revenues to 5% of revenues. This essentially implies that over the next 5 years, we are going to see an acceleration of the growth in the industry. Tech natives and what we call digital reinventors will actually account for 75% of enterprise tech spending in the next 5 years. And we'll spend some time talking through what that is. The big implication for service providers is that the opportunity set ahead of you is not what you have seen in the last 5 years. In fact, the opportunity set is changing quite dramatically, which means that you have to rethink your choices in terms of which segments to go after and what to offer to those enterprise clients. Second, tech is accelerating 2 fundamental shifts in business models worldwide. First is direct to consumer or direct to stakeholder, as we like to call it. And second is ecosystems. Enabling these new business models is about a $150 billion opportunity for service providers. Third, cloud, AI, and cybersecurity will accelerate pivot to digital 2.0. We will spend some time talking about what are the new opportunities these will create, both the magnitude as well as just the types of opportunities that will emerge from these megatrends. The implication for service providers is to think through new sources of differentiation to capture these opportunities. Fourth, we'll spend some time on hyperscalers. Our work indicates that they will either control or influence more than 50% of the services revenue pool. Service providers will therefore have to serve competing cloud and SaaS providers, and more importantly, build IP and platforms to win in this space. Finally, we will see an emergence of new delivery models, and the war for next-gen talent will only intensify. We'll share some data with you on the demand-supply gap that we are seeing for some of the hot technologies of today. The big implication for service provider, therefore, is to innovate on their operating model. Those are really the 5 big trends that will shape the future of this industry over the next 5 years. What we're going to do now is to go through each one of them and illustrate what we mean. So let me start with the first one. As I said, the intensity of tech spending is actually going to increase quite dramatically. So let me start with the left-hand side of what you see on the screen. As a percentage of GDP, overall tech intensity was about 4.5%, and I'm talking about global GDP. It was about 4.5% in 2010. By 2020, it had gone up to 5.5%. By 2030, we expect it to be 7.5%. That's an incremental 200 basis points worth close to about $2 trillion of incremental spending by enterprises and consumers in technology. If you look at the right-hand side of the page, it actually means the standard metric of revenue as a percent or IT spending as a percentage of revenue, which used to be about 3% in 2020, is expected to go up to about 5% by 2030. And this is the huge opportunity for service providers. And by the way, these percentages will vary depending on whether you're a tech native, a digital reinventor, or an incumbent. We actually looked at about 2,000 global giants, global enterprise clients. If you go to the next page, it will actually show that roughly 800 odd companies, which is what we call tech natives and digital reinventors, will account for close to 70% or 75% of this enterprise tech spending. And by the way, their buying behaviors, their needs are actually going to be very, very different. As I said earlier, the implication for service providers, therefore, is to create a new service catalog to meet these requirements and to differentiate to win in these services. If you go to the next page, this is the trend around ecosystems. What are ecosystems? Ecosystems actually is a cross-sector proposition which is centered around a core customer need. They emerge from consolidation of industry value chains, which are often triggered by technology. Some of the work that we have done seems to indicate that we are going to see about 12 large ecosystems emerge globally, and almost 20% of global revenues will actually flow through these ecosystems. These are both business to consumer ecosystems, the most important being some of the e-commerce marketplaces, but these are also business to business ecosystems. Implication for service providers is the need to tech enable these ecosystems, and that's about $100 to $125 billion opportunity. A lot of work around platforms, a lot of work around digital customer experience, advanced analytics, and data security will emerge from some of these ecosystems that are forming globally. By the way, we do see these ecosystems not just in the US or in Europe, but also many of them emerge in China and India as well. The second big business model shift, which has gotten accelerated quite dramatically because of the pandemic, is direct to consumer. And by the way, when we say direct to consumer, it is not just about e-commerce or online sales in consumer and retail. It is actually direct to stakeholder, for example, direct to physicians, direct to subscribers, and across industries, beyond just consumer and retail, whether it is insurance, whether it's healthcare, automotive, we are seeing a big increase in these online and omni-channel models. And in order to enable them, we expect an incremental $50 to $70 billion of spending, both in terms of creating these business models, but also operating or running some of these from a business process management perspective. Some examples of services, digital customer experience, loyalty, personalization. There are many, many new services that will actually gain prominence because of these new business models. Let me spend time talking through overall numbers as we see it. We've actually looked at the business opportunity around five categories: cloud consumption, cloud related services, which is really both managed services as well as professional services, digital services, some of the core traditional services, and business process management. If you look at 2020 versus 2025, three things stand out. First, at an aggregate level, we expect tech services to grow from close to $1 trillion to almost $1.3 trillion, which is a growth of 5%. relative to the historical growth, which was 3%, we actually see an increase in growth. And later on, we'll talk to you about what it means for the industry in India. We will actually see an acceleration of growth over the next 5 years relative to what we have seen in the last 3 years. What I'm sharing with you is the global picture. The second point is on cloud in particular. If you look at cloud consumption and cloud services, these are all going to double over the next 5 years. And these are big revenue pools. They are going to actually double over the next 5 years. And hyperscalers will influence a large proportion of this services spend. I think the third thing, which is a corollary of the growth that we're going to see in cloud and digital, is the fact that traditional services will actually decline at about 10% per annum. Historically, that rate has been anywhere close to 3-odd%. That decline is going to get accelerated. So lots of numbers on this page, but the big message is really digital and cloud is going to drive the future of technology services, and it will lead to an acceleration of overall growth in the sector. Let me now hand over to my colleague Anuj to walk you through some additional opportunities for service providers.
Thank you, Vikash. As Vikash mentioned, the opportunity around cloud services will be one of the biggest value pools for the industry. To understand that in the next level of detail, we analyzed what happens to the workloads as they move from traditional infrastructure to a cloud-based infrastructure. And as you see on the slide, as the migration happens, there are 3 main implications that we observe. First, we do expect the managed services intensity around managing the infrastructure to go down by as much as 50 to 60%. In contrast to that, we do see a new value pool around professional services to come up for the service providers. And as Vikash mentioned, a big portion of this opportunity will be controlled by the hyperscalers, given these workloads would be moving to the hyperscalers. Similarly, if we do a double click on the second biggest driver for the spend, which is around industrialization of AI, as we move from targeted use case implementation to at-scale implementation of AI, we will see a big change in the underlying data and technology stack that the enterprise customers would go through. And what you see here is the reference architecture for a bank of future with a reimagined engagement layer, AI-powered decision-making layer, enabled by the underlying core technology and data layer, where you have the cloud infrastructure, data management, a modern API architecture, cybersecurity, etc. The big message being the data and technology enablement that will be needed to do AI at scale would drive a very significant opportunity. And that's the second big growth vector we want to highlight. As the opportunity landscape is changing, even the competitive landscape is changing for the industry. There are 4 segments of players who are disrupting the traditional technology services value pool. Starting from the first one on the top list, it is the hyperscalers who are disrupting the infrastructure managed services spend. You have the SaaS players who are targeting the app dev and app maintenance spend pool. You have the specialists who are going after use cases around digital adoption, for example, Palantir for analytics, and the traditional OEMs as they change their strategy to a services-led strategy and start to offer their portfolio in an as-a-service model. Now, as these changes happen, the same competitive landscape that's changing is also creating tremendous opportunity. These emerging tech platforms, be it the vertical specific platforms, be it the SaaS platforms or the infrastructure platforms, they are disrupting the enterprise architecture and creating an opportunity for the service providers around these ecosystems. we expect 30 to 40% of the digital services revenue to be influenced by these platforms. The implication being the service providers will need to organize themselves to partner with competing ecosystems and build offerings that are built on the back of these platforms and redefine their go-to-market model to collaborate with these platforms. The next big shift we want to highlight is as the opportunity set changes, one of the biggest unlocks that will be needed would be the digital talent pool. What you see here is the next gen talent pool. The hiring growth rate that we have seen, which is as high as north of 40–50% for some of these roles. And what you see towards the last is the number of open positions that we see in the top 5 companies. And that number is much larger if you take the overall supply demand mismatch that's there in the industry. Service providers will have to invest or continue to invest in reskilling the talent, not just the engineering and technology talent, but also some of the non-engineering talent. If we take these 5 trends that we just talked about into consideration, there are 10 specific actions that service providers should consider to win in Digital 2.0, starting with rethinking where to play in terms of the target customer segments, the target geographies, the service lines, 2 very specific examples being GTX and ecosystem that we covered, and then tailoring their offering propositions and sales coverage to compete in these areas, leveraging new sources of differentiation, primarily around platform and IP-based offering, continuing to leverage M&A to accelerate the build out of their digital capabilities, reorganizing the operating model to partner with competing ecosystems, to really strengthen the partnership and alliance muscles in terms of building the joint offerings and go to market with them. And finally, innovating on the operating model, both on the basis of future of work, but also accelerating the reskilling for Digital 2.0 skills. So these were the 10 specific actions for the industry, and we covered the global trends. To bring it in the context of the Indian industry, the Indian IT services industry over the last 5 years has seen a growth rate of 7.5%. We expect this to accelerate by 2 to 3 percentage points. So we are likely to see a growth of around 10 percentage points over the next 5 years. That would mean the size of the industry would be at 300 to 350 billion in revenue. This growth will come primarily on the back of growth we will see around digital services, which today accounts for 30% of the revenue. But 5 years from now, it will be north of 50% of the revenue and will drive somewhere around 170 to 200 billion dollars of revenue for the industry. Achieving this would require multiple concerted actions by the industry. I would highlight only 3 of them. The first is continued investment by the Indian service providers in building and scaling digital technologies to a point where we are differentiated at a global level, and as we talked about in the previous session, where we have both the scale and the agility. Second, further accelerating the investments we have been making in digital reskilling. Talent is going to be the capital, and we have to further accelerate reskilling, both in terms of the scale, but also the skills that we need to invest in. And the third one being investment in the ecosystem of the new growth vectors that will shape the industry. Some of the examples for that are the enterprise SaaS ecosystem, cybersecurity, data and AI, 5G, IoT, product engineering, to name a few. So to sum it up, as we discussed, the opportunity landscape is changing, but at the same time, it does require revisiting where we play, how we differentiate, and how we organize to compete and win in this. but technology is the business, and we will see an acceleration of growth for the industry over the next 5 years. Thank you.
And actions to win for service providers in the next decade, and a lot more insights. I mean, there were so many numbers that was actually mind-boggling that can actually help steer and pave the way forward. Totally slating to win.